Joe, thank you so much for being here with us today. I was thrilled that you said yes, because I first heard you talk at the end of March, and I've been on 4 different of these Zoom calls with you, and you were like the only person that I found that really seems to know what they're doing. I feel like there's so much bad information out there and misinformation, and I know more than a lot of people, and I know it's come fast, but it's kind of disheartening. And I think for real estate agents, a lot hasn't been addressed because some of them are independent contractors, some of them are payroll, and so it's really been a mess. So I know I chased you hard, and I thank you so much for spending the time today and taking the time to go through this. Kind of what we want to do is have you go through your slide deck, explain an overview on the PPP, and then Patty and I will ask you questions that we've prepared. And then we also will open it up to the audience for questions. And I know we're going to have a ton of them. Okay. We're just not going to, Patty and I will read through those once we've gone through our questions, so we can see, just so we don't kind of duplicate things or slow you down.
Sounds great. No, that's fine. And I can basically, I need about an hour and 15 minutes before I got to run to my next webinar. So
well, that's 15 minutes more than we had hoped for. So we are very thrilled to have you, and we'll let you get started. I know there's going to be a lot of questions.
Sounds great. Okay. So basically I just start from here, or you guys are live at this point?
Yeah, we're live. And what I'd like you to do is go through your slide deck as it pertains to real estate agents. So I don't want to talk about, you know, a corporation that has 500 employees. Or
right. Exactly. So, okay. Looks like we got almost 100 participants. Let's roll. Okay. Obviously we're going to talk about, my name is Joe Amato. I'm the district director for the Small Business Administration for the state of Nevada. I am here basically, been here for about 3 years, and been obviously working for the last almost 2 months now through everything that has affected business and, you know, regarding COVID-19. And I'm here today basically to go over the payroll protection program, especially for our select audience here of realtors, real estate professionals, and hopefully we can provide not only good information, but answer a good majority of your questions. Next slide, please. Okay, basically what we're going to talk about is the purpose of the protection program, what we're going to call PPP, Payroll Protection Program, specifics about it, eligibility, especially as it pertains to those in the real estate community, independent contractors, what the lenders are usually going to look for, how the loan amount is determined, what the 75% rule is, and then we'll have question and answers. Next slide, please. Again, I'm Joe Amato. I want to thank the Nevada Small Business Development Center program that helped me put together the slide deck. You could see our SBA logo and the SBDC logo in the bottom left-hand side of the slide here. Next slide, please. Okay, well, the Paycheck Protection Program, which is now getting ready for its second round of funding. The initial funding was about $349 billion. There's another we think $300 billion that's going to be approved, 60 billion of which will go toward rural areas, and 240 billion that will go toward the rest of the country for the Paycheck Protection Program. It is a 100% federally guaranteed loan to businesses, independent contractors, sole proprietors, that is established through your lending community. Your area lenders are the participants in managing, processing, and funding these the PPP allocations. It is supposed to allow you up to 8 weeks of payroll, which will be forgiven if you maintain a payroll census equal to the number of employees that you had previously in whatever the test or target period was. For most of you who are independent contractors, it is going to be an employee base of 1. So when you basically get your PPP funding, you have to attest to the bank that you will keep yourself employed, whatever capacity that you want to be employed in, for that 8-week period. Upon the completion of the 8-week period, you provide payroll information to your lender that'll allow you the opportunity to have it 100% forgiven. I'm going to tell you now, because it's very, very important, most of the time forgiven debt is a taxable event. Congress, in its great knowledge and foresight, wrote into the law that any forgiveness on the PPP program would be a non-taxable event, which is very, very good to know. What payroll costs mean when we talk about how you're going to calculate the amount of money that the lender is going to extend to you. If you're a 1099 employee, like most of you are, it will be specifically what your earnings were for all intents and purposes for the base year of, let's say, 2019. So you'll take a look at your earnings for that year. You'll take a look if you pay any kind of group health insurance, or you pay any kind of a health insurance policy for yourself and your family. That can also be included. There are some limitations which we'll go over as well, but even if you make contributions to your retirement account, all that can be included as an all-in cost, even as a 1099 employee. If you're a real estate owner, if you own the real estate agency, then you basically can apply on your own and for your employees, if you do have employees, and on your own if you basically make W-2 income. So the W-2 income is primarily important for any business that applies for PPP, but if you're an independent contractor, then normally your 1099, your Schedule C, those are the documents the banks are normally going to look for to substantiate what your monthly average income balance is as a 1099 contractor. Next slide, please. The PPP program is meant to be, and I tell everyone, if you're not expecting to get 100% loan forgiveness, it's an okay program for you. It does end up being a loan, and I can explain how that would work later. If it does end up becoming a loan, it's a loan you have to pay back in 24 months. It's at a 1% interest rate. The amount of the PPP program cannot exceed $10 million. It'd be absolutely impossible for any one sole proprietor or one independent contractor to get the $10 million because of some other limitations that the program has, like you can't make more than $100,000 a year. Even if you make more than $100,000 a year, there's a $100,000 a year limit per individual in the PPP program. If this does turn into a loan after you basically complete the process and there's a residual amount that turns into a loan, there's no payments for 6 months, although interest does continue to accrue. But as I said, most people that I counsel on PPP, and I'm hoping 100% of the people that get PPP funding do not end up with a loan. You end up with 100% forgiveness. There is no collateral and there's no personal guarantees on a PPP funding as well. Next slide, please. It's a pretty easy process. If you go on SBA.gov/disaster or SBA.gov/Paycheck Protection Program, you will see forms. There's a one form application. It's 2 pages. It's the 2483. That application basically allows you to, as I lose my screen, this is not good. Oh, I should have shut off my phone. I lost my screen and I lost my mouse all at the same time.
It's all good. You've done this, I think, about 80 times, so I have to.
Yeah, I know, but I like to. Well, there's my mouse. Why isn't it moving?
Oh, it's so much fun. I was on one of these the other day that I was leading, and all of a sudden my internet went out. And I was like, well, you know, there's only sometimes.
Let me check something real quick that I'm plugged in. Please get my mouse back, which I just did. Thank goodness. Good. Okay. And so this 2-page document basically will allow you to fill out the basic information, what your monthly average payroll is, whether you're a business or a 1099 employee. And that times 2.5 will give you your PPP payroll amount. And we'll get into that a little bit later. And it'll also ask you the number of employees you're employing. If you're a sole proprietor, it'll be 1. If you're an independent contractor, it'll be 1. If you're a partnership, it'll be 2 and no other employees. If you're a business, it'll be the number of employees that you've employed during the target or the analyzed period, which in most cases, we're using 2019 for everyone. The payroll documentation they're going to ask for an independent contractor, it's a 1099 form or your Schedule C. For same with sole proprietor. For a business operation, it's usually your 941s, your quarterlies, and your 940, your annual report. The lender's forms, they have a 2-page application as well. It's pretty simple for them as well for what they need to do. And everything is filed electronically with the SBA. So once they have the information, they can input it in one day, and they usually can get a response pretty soon thereafter. Okay, next slide, please. Who's eligible? In this case, we're talking about realtors. You know, if you own a realty firm and you have employees, as long as there's less than 500 people, you're eligible. If you're an independent contractor, you're eligible. If you're a sole proprietor and that's how you set yourself up, you're eligible. If for some reason you're a nonprofit realtor, which I don't think that exists, you're also eligible. But if you're a veteran or part of a veteran organization, you're eligible as well. And it runs concurrently. Now, the thing that I have to make sure that everybody understands is if you have multiple businesses, you can only apply once through one of your companies. So say you're an independent contractor as a realtor, but you also own the candy store down the street. You can only apply with common ownership for one PPP. The only other exclusions are hotel industry and the food service industry. They're allowed multiple PPPs. And if you're part of a franchise operation, as long as each individual entity is under 500 employees. Next slide, please. Who is ineligible? Anybody in the cannabis industry, if you're a household employer, and if you previously defaulted on a federal loan in the last 7 years. Those are the 3 main ineligible entities. Next slide, please. What the lenders need, honestly, the information that you provide, where we talked about 1099s, Schedule Cs, 941s, 940s, the number of employees. The banks are basically, the way the law was written, the banks are and have to basically certify that you've certified and attested to that the information you gave them is truthful and accurate. There is absolutely, it all falls on the applicant. If there is anything that's untoward during this process, it falls back to the applicant. The banks are held harmless because of the way they were able to speed up this process. And most of your community banks, your regional banks, your sub-regional banks have been very quick to get these things through. Other lenders have not, but I will not digress. It's a very easy process, and it shouldn't take more than 5 days for them to take your information and get your application approved. And then after you basically get approval, the banks are required within 10 days that they have to fund the transaction. I'm seeing the chat. I did say over and over again, it's a non-taxable event if the loan is forgiven. So about 18 different people asked that. It is a non-taxable event. So it does not affect you if your PPP loan is forgiven. Next slide, please. What the lenders will need, and this actually alludes to another question I just saw in the chat. The lenders basically complete the 2484. You do not touch that. The only form that you can complete is the 2483. It's a simple 2-page application. Basically, what the lender is going to look at, and it's a slide here, there's 2 programs that are completely interdependent of each other, or independent of each other. The EIDL program, which is the Economic Injury Disaster Loan Program, which is the loan program, which is the first program that came out in mid-March. That is a loan program, and that also has a new twist to it, which came out in April, which was the advanced side of it. The EIDL loan is specifically a loan program. The PPP is basically a funding mechanism that we're hoping to be forgiven debt. It shouldn't be a loan. If you do have, and if you haven't, or if you have applied for an EIDL loan and received funding, you have to state that in your PPP application. I've counseled people both ways. If your EIDL loan is small, and in most cases with realtors and employees of one, the maximum amount that you can normally get is small enough on your PPP that it doesn't make sense to wrap your EIDL loan into it, because if it's not forgiven, then you have to pay it back in 2 years. In most cases, EIDL loans are being paid back between 10 and 30 years. So you have a longer amortization. Even though the interest rate is 3.2 0.75 on an idle loan fixed, and the PPP loan is 1% fixed. It's better to keep your idle loan out of your PPP funding, and we can get into that a little bit later, not to confuse you. Next slide, please. As I said, the payroll documents pretty simple are, if you're a business, you need your payroll records to substantiate your monthly average payroll. The same thing for an independent contractor, you need a 1099. I know some don't have 1099 miscellaneous, they have other 1099s. As long as you're providing that to your lender, they're going to determine what your monthly average income is to determine your PPP funding. And then for your either 1099 or either as an independent contractor or sole proprietor, you can normally use your Schedule C as well. But in most cases, for an independent contractor, you want to use 1099 as your basis because that shows your actual revenue. If a borrower doesn't have any of these documents available for whatever reason, the banks have been instructed by the SBA and Treasury to work with you to substantiate it, to do the bank statements or other mechanisms to find out that, find out what your average monthly income is. Next slide, please. Okay, so what you're going to do to determine the loan amount is, whether you're an independent contractor or sole proprietor, whatever the situation may be, you're going to basically take the last 12 months of your employment. And we've been using 2019 as the base year because that's the year for businesses that they can also provide 941s and 940s. Same with the 1099 contractor. I mean, you get your 1099 at the end of 2019, you can use that as the basis. So let me explain something, because it'll talk about step 1 and step 2. So say your 1099 says $250,000. You're only allowed up to $100,000 per individual. Okay, so that basically equates to $8,333 a month. Okay, so even though you make $250,000 or $300,000 or $500,000, I know how wealthy all your real estate people can become. You can only apply for up to $100,000. So think about that $8,333. Let's round it down to 8,000 just to make it simple. You're allowed 2.5 times that in your PPP funding. So you're basically $20,000 in change for all intents and purposes. Now understand something, that would be your PPP amount that you have to basically submit for, because that's the top number you can get as an individual. So yes, $20,000 better than stick in the eye? Absolutely. It's even better than a stick in the eye if it's free and forgiven? Absolutely. So, and all you have to do, as I said earlier, is that $20,000 in change would be payable to you. The banks do not mind doing them and doing them quickly. You get $20,000 in your account. You attest to the lender that you're going to be there day 1, week 1, as your own person, as your own employee of one, even though you're an independent contractor. And for the 8 weeks to follow, that you're going to remain in that same position. At the end of the 8 weeks, you're there showing that you've been there and you took care of yourself for the 8 weeks. You never left. You didn't quit. And that $20,000 in change will be fully forgiven. Now, it sounds strange, but again, it's $20,000 you didn't have, and it's $20,000 for free. And because of the limitation of $100,000, you as realtors, if you are an employee of one or independent contractor of one or sole proprietor, you're basically going to be limited to the amount that you can get under PPP because of the $100,000 limitation. So I don't know, good news for some, bad news for others. I mean, obviously it is the way the law was written, so there's no way around it. Next slide, please. So as I said, so even if you make 250, you're going to use 800 as your baseline. You're going to divide it by 12. It's 8,333. You're going to multiply that by 2.5. It's going to be $20,000 in change. And that, for most independent contractors and sole proprietorship, will be it. You are allowed, and some banks are estimating it differently, but if you do get that $20,000, you may be able to bump it up another 25% depending on the lender. Some lenders are wrapping the 25% into the payroll amount. Some lenders are adding 25% to the payroll amount. It really depends on what lender you're working with. I went back to DC and said, hey, lenders are doing it both ways, and went talk to Treasury, and they said, you know, we're approving it. We're approving it both ways, because the way the law is written, it's very, very nebulous on whether or not you can add the 25% or it has to be included in the PPP. Some of your more conservative banks are definitely including in the PPP. some of your other lenders to give you more money. So say you do get the $20,000 PPP amount. You take that $20,000, 25% of it is $5,000, you'll get $25,000. As long as you maintain that employee of one, if you're an independent contractor, or if you're a realtor business and you have 10 employees and you've applied, you're obviously getting more money because you're including more people into the equation. But you have to keep those same 10 employees from day one, week one, after you get your funding, to day 7, week 8, after you get your funding, for you to be 100% forgiven. So, but in that case, you basically, banks are doing it 2 different ways. They're either subtracting out 25% if you want other costs like mortgage interest payments, rent payments, utility payments, and other banks are basically saying, we'll give you a 25% kicker. If you are the independent contractor of one, that will basically raise your loan to $20,000 and change to $25,000 and change, which is obviously worth doing if the bank will allow you to do it that way. And like I said, in the area here, I'd say about 60% of the banks are doing the add-on and 40% of the banks are doing it inclusive. And neither of them are wrong. It's just depending on how they want to read the law. Okay? Going back to the EIDL loan, whether or not you should add it or not, with most of you, the independent contractors and sole proprietors, it doesn't make sense to add it. It's a better deal just keeping the loan, paying it off over 10 years or 30 years in some cases. The EIDL loan can go up to, it says it can go up to $2 million, but right now they've limited, for those who have businesses that have applied for EIDL loans, the maximum amount has been $500,000 that they've distributed lately. Next slide, please. Okay, so determining payroll. Again, if you're an independent contractor, it's going to be your 1099. If you're a sole proprietor, it's going to be your Schedule C. Now, the Schedule C gets a little tricky if you use that because some of the banks are using your net income, which isn't really a good indication of what your compensation is as a sole proprietor, because you're obviously, I know I'm a Schedule C company, and I make sure I don't pay any taxes a year. So I use every VIP dollar that I get in compensation in one way or another. So we've been sort of dealing with some banks on some issues with this because it's not a true indication of what their real compensation is. And they make determinations based on the top line of how they run their sole proprietor, not based on the bottom line. So we're having that argument right now. We're winning it with some banks, with other ones we're not. They want to just use the net figure. So you have to be very careful, especially if you're a sole proprietor. Reach out to me and I'll give you my email address for the first time today. It's joseph.amato@sba.gov. I commit suicide mentally every time I do that because I'm answering close to 500 emails a day at this point.
Wow.
So it's I start at 5 in the morning and I end at midnight every night.
That's how I found you and chased you, and you and here you are today. So thank you.
And thank you for this valuable info.
If you're a realty business that is applying for PPP, then it's salary, wages, commission. It's W-2 income. Understand, if you're a realty business applying for PPP and you have 110 independent contractors, they are not eligible in your PPP calculation. Independent contractors have the right and ability to apply for PPP on their own. You cannot use them in any way, shape, or form in your payroll calculations. So how do you determine payroll? It's gross salary, wages, commissions, compensation. If you get tips, I'm not sure realtors get tips or they can legally get tips. Vacation, parental, family, medical leave, allowances for dismissal. So as a business, you're going to take all these things in consideration, including group health benefits. If you're paying group health benefits, it's on top of the $100,000. If you have an employee that makes $125,000 a year, you basically cap them out at 8,333 for that individual. But if you also cover $1,500 a month on his group health benefits, you can add that on top of that for you as a business. You as an independent contractor or sole proprietor, if you pay into a group health plan through maybe one of your organizations or such, you can add that payment, that monthly payment as well. Any payment into retirement and payment of state and local assessed taxes on complication that are deemed 100% complete. Why that's important? If you're using 2019 as your base year, then all your federal, state, and local taxes are paid. Those can be included in your gross calculations. If you, for some reason, have to use 2020 as part of it, because maybe you just started, say, in June, or you started in December, or you started in January, remember, anyone who is active as an independent contractor or sole proprietor before February 15, 2020 is eligible for PPP. Here we go again. I have to get rid of these phone calls. So understand, if you use 2019 as your base year, you've already paid all those things. You can use all those in your gross calculations. If for some reason you have to use 2020 where you haven't made your quarterly tax payments and stuff yet, the issue then is you have to basically subtract the federal payments, or the fact that in your gross payroll calculations, you have to subtract the federal and or state or local if you haven't paid them yet for this quarter. Okay, it's a little confusing. I can deal with you one-on-one if it's pertinent to you. Next slide, please. I'm sorry, I'm losing my voice already today. What you can exclude is anyone in excess of 100,000. Payroll taxes only if you're using 2020 as part of your base year. Anyone, and I doubt that's the case of anybody here in the realty business, anyone whose principal place of residence is outside the United States, they can't be included in the payroll calculation. And then these two things I don't even know about. If you're qualified sick leave wages under 7,001 or qualified other leave wages under 7,003, I don't even know what they are. They haven't even come into play yet with anybody I've talked to. And again, if you're a business applying, you cannot include independent contractors as you're in your payroll calculation. Next slide, please. Use of proceeds for the PPP is for payroll primarily. You can make mortgage interest payments, not P&I payments. You can make rent payments, utility payments. You guys would understand this real well. It's more occupancy related. If you borrowed idle money should be for operations. If you borrow PPP money, you should use it exclusively for payroll, because you can use idle money for loan payments, rent payments, lease payments, debt service payments, utilities. It just depends if you get enough. Interest payments that were incurred after February 15th cannot be included, but whether they incurred before February 15th, they can. And you can refinance your idle loan if it makes sense. If you have an idle loan question, just get in contact with me directly, joseph.amato@sba.gov. Next slide, please. Okay, I've said this 100 times about idle. Go ahead, next slide. Okay, the 75% rule, and this is where it gets quirky, where I explained to you before. Of the 2.5 times your payroll amount, okay, of your 2.5 times your payroll amount, so say, just for grins, it's that $20,000 number and change, okay? 75% of that has to be used for payroll, okay? And I'm not sure how the banks are going to reconcile it yet, because we haven't had to reconcile one yet, but 75% of it has to be used for payroll. 25% could be used for other eligible expenses. Now this is where it gets quirky for the banks, because they're saying 75% of the payroll amount, but the way the law reads, it's 25% of the PPP funding amount. So that's where this 25% kicker with some of the banks comes into play. Because say you get $20,000 in change in payroll funding based on $8,333 a month in your average payroll times 2.5, okay? You can then add that $5,000. Some banks are adding the $5,000 to get you to $25,000 in change. You're obviously, the whole amount is now $25,000. You're obviously using 75% of your money for payroll if you're using all your payroll money toward payroll. And then that other 25% you're given is then used for other expenses. If you do both those things and maintain your employee amount, your employee number of 1, or if you're a business of whatever you apply with, then it's 100% forgiven, both the payroll amount and the non-payroll amount. Again, it's a really sticky rule. Some banks are giving you the kicker, some banks are not. And neither bank is wrong. So that's basically the best way to explain the 75% rule. And I can get into that more directly with some of you answering questions, or specifically if you email me at joseph.amato@sba.gov. Next question, next slide, sorry. Loan forgiveness. Basically, with independent contractors, sole proprietor, you're an employee of 1, or in the application, you'll put yourself as the employee. You keep yourself employed for 8 weeks, it's 100% forgiven. If you're a business and you apply with 10 employees or 30 employees or 50 employees, that number has to be on staff day one. Day one, the day you fund the loan, or the day after you fund the loan, and you have to keep them for 8 weeks. Say you have 20 people and for some reason you only can keep 18. They'll still forgive 90% of your loan, 10%, 90% of your funding, PPP funding, 10% will go into a loan that has to be paid back in 2 years at 1% interest. The forgiveness is tied directly into the number of employees or the number of bodies that you apply with. The number of bodies is based on an estimate that you and the lender work out for the year that you're analyzing. In this case, in most cases, it's 2019. And again, you have to basically be in a situation where you keep that number static from day one. A lot of people have asked me, can I ramp up if I'm at 25 and only 15 are coming back because 10 want to stay on unemployment? You have to be at that number day one. There's no ramping up period. There's nothing. The whole idea of PPP is to basically take people off unemployment, plain and simple. Independent contractor, sole proprietor, it's easy. You're an employee of one. You employ yourself immediately. You keep yourself for 8 weeks. You're fully forgiven. At the end of the day, with that 75% rule, that 75-25, you cannot, if for some reason, say you get $20,000 in change for your PPP, your payroll amount, and you get $5,000 for other costs and a kicker, but say for whatever reason, the bank gives you $10,000. That $5,000 extra above the 25% limit is basically going to revert to a loan. So that difference between that 25% cap. So you don't want to do that. You don't want to have to pay something back in 2 years, even if it's at 1% rate. You're better off going online, directly to the SBA, getting an idle loan, and having that basically taking care of your operating expenses and that going that direction. Next slide, please. If you're having trouble finding a participating bank, there are now 3 lenders in the state of Nevada have reached out to me and said, we will take on non-depository situations. There are some banks that people are not very enthused about their interactivity on the PPP program. I do not want to say anything more of it and get myself in national trouble again. But there are a lot of local and regional lenders that are really kicking butt and doing a great job. If you're having trouble finding a lender, if you go to your lender and they seem to not be interested in helping you, especially as an independent contractor, sole proprietor, contact me and I'll point you in the direction of one of those 3 banks. There was 4 banks, one had to back out because they got inundated with deals. And if you want to find somebody on your own, you can go on SBA.gov/paycheck protection/find. It'll basically give you this screen. You put in your zip code and it'll tell you lenders that are involved in the program. They want me to type my email address on the chat here. So just Joseph, joseph.amato@sba.gov. If somebody wants to do that. Okay. Let's see, next slide. Yay, question and answers. Okay, before I start question and answers, let me go get a bottle of water before I choke to death.
That sounds fair. Thank you. He is a wealth of information, and as you can tell, there's a lot of variations. And I think what's happened is this has come so hard and so fast that everyone's kind of just scrambling to keep up. And so that's why I really wanted to get him on here today. I know I've seen 3 different ways that agents have been paid already in town, and they've been approved, and they're different than what's there. So I'm thankful that we're going to be able to run through some examples and get some detail, and then we'll answer all your questions as much as we can. And we will type the his email on the fast, and you guys are all realtors. You should be able to get it quick, but we'll type it out in there for you.
And I want to put it out there.
I typed it in there. It's out there in the chat.
I'll put it out there. I told Debbie yesterday, I am looking to move to Henderson. I'm trying to find the perfect house, 2 master bedrooms and a gourmet kitchen. That's what I need.
Well, you've come to the right place.
So one of you should be able to find me something perfect.
Well, and just so every realtor on the call knows, yesterday he committed to working with me. Please don't be reaching out to him for real estate.
Yeah.
Yeah, just
Fair
go
enough.
through debit.
Thank you for all the great information, Joseph. I mean, wow, there's a lot of particulars, and I know we have a lot of questions to get to. A couple of quick questions for you. Do you have to be a member of the bank that you apply through, or can, like, if I'm a member of Wells Fargo, can I go to Nevada State and apply?
Okay, so I have to not get myself in trouble again. And I'm looking at here right now. My bank is telling me I can't apply because I don't have a checking account. I don't want to say what I really think up here, so I'll just tell you what the facts are. You can apply in any bank. What I frown against is applying at multiple banks. The reason being is if your application gets red flagged because you've applied more than once, you could be basically disqualified from the program, and it takes me a real big headache to get you back into the program because, you know, obviously people are going to try to be fraudulent and get more than one PP loan and so on and so forth. So you want to be careful there. Some banks are requiring that you had loans before, that you have credit cards before, that you have a banking account with them. I mean, they're well within their right to do that. I would tell you that if you need a lender that does not care if you have a depository relationship and, you know, with them at that point, that's fine. What most of the lenders are doing, though, is even if they're taking your application as sort of an orphan application because you're not part of their bank, they're still requiring you to basically open an account with them, which is fine when you think about the reason why. They're going to put that money from PPP into that account. The best way for them to track that you're using money properly is for them to basically have vigilance on that account. So it's for your benefit. So almost everyone that I talk to that basically says that I refer to a bank, one of the three banks, you know, they said, well, they asked me to open an account. I said, well, think about why they're doing it. So I'm telling you to the mass of you that most of them are going to ask it, but they're not. And all three of them have told me the same thing. They want to win your business. I mean, if you get sort of screwed over by, I mean, I can't tell you how many emails, I'm talking over 1,000 emails from people saying, I've been with this bank for X amount of years and they won't do my PPP loan because I never had a credit card with them, or I didn't this or that. So without naming banks, you know, that the bank has the right to do anything they want. Whether or not you want to stay there is another story.
But you can go look somewhere else. So if the bank that you're banking with.
Every bank there, but again, certain banks want the relationship already. Like I said, I can give you names of banks that are basically taking applications if you want to look elsewhere from where your bank is currently.
Great.
Can you do that now?
Thank you.
What's that?
Can you give us those names now?
I like to do it one-on-one because I don't want these banks based. I actually do an introduction for each person that asks me. Okay. Because I don't want them to be inundated with 300 or 400, you know, inquiries all at once. So I do it actually one-on-one. So I'm sort of, and I'm keeping tabulations because I'm introducing them to all three banks equally. That I'm trying to be fair as well. Okay.
Well, and I think it's safe for me to say that the bigger banks have been moving slower, and the local smaller banks are the ones that have been. That's what we've seen with our guys.
Well, let me put it this way.
From our agents.
The regional banks, the community banks here, are of your top 10 lenders in the state so far for PPP. 9 out of the 10 are community and regional banks. 9 out of 10.
That's a pattern we've been seeing in our office.
Yeah, I'm by far. I mean, that's the facts.
Great. Now, can you talk to us a little bit? I believe if I heard you earlier, it was $300 billion the second round they're considering, right, of the stimulus money to fund this. I know the first round it was kind of chaotic. Let's hope the second time around it goes a lot smoother. Is there any idea? Do you have any knowledge of when that might be approved? What the timeline looks like?
Where it's our understanding, and it's not concrete because it's not signed yet, but my understanding it's going to be signed tomorrow and active Thursday. The program is going to be ready.
Great. So people who are on this call are really at the forefront. If they missed the first wave of it, they should get their ducks in a row, find out what bank that they want to apply with, and get ahead of it because there'll be another wave of people who won't want to miss the second time.
Yes, absolutely. Because I don't think there'll be a third time. I mean, this it looks like this might be it. And what we're hoping is that the vast majority of people that needed it did get it the first time around, or in the queue already the first time around, and are just waiting either additional funding, or in some cases, if they've received their number already, they're just waiting for the bank to basically do their documents. The bank has a 10-day leeway from the day they approve you to the day they can fund you. By law.
Right.
So some of them that may have, when funding ran out last Thursday, Friday, they're still in that 10-day window to where the bank, if they already had an E-Tran number from the SBA, that they can already go that direction.
Great.
So I have a question, because I know when I filed back a while ago, I had a lot of choices because I'm a real estate agent. I have employees in my real estate team. I have a real estate brokerage. I have a property management company and a real estate school. And I was like, oh, I can apply for all of these things. And then I was like, no, I can't. I have to really be selective.
No. With common ownership, and I saw a couple of chats already sort of alluding to that same question, you have to pick and choose which is going to give you the most bang for your buck, honestly. And by picking and choosing the best of your holdings, because what they're going to do is the minute you apply, they're basically going to check off both your tax ID number if you do it through a business, or your Social Security number if you do it as an individual, independent contractor, so on and so forth. And that basically will cut you off from any other applications. So yeah, you just have to pick, what business. So if you own a piece of a business that applied, or if you're the owner of a business applied, then you're there. Now, there was somebody that asked if I own a minority portion of a business that applied, but I'm also an independent contractor, can I apply as an independent contractor separate from my ownership? Now, we're trying to get a real good read on that as well, because normally the SBA rule, if you own 20% or greater in a business, then you're included as an affiliation with that business. The CFR actually rules that if you have 50% ownership or more. So in the one person that asked, I have 25% ownership in a business that applied, but I'm also an independent contractor. Can I apply as an independent contractor? If you take the 50% rule into the equation, then yes, you can have that business that you're a minority position on apply and help those employees. And as an independent contractor, you can apply on your own. So I'm answering one of the chat questions.
Yeah, and I want to be real clear for a real estate agent, because I know a lot of our agents, I was telling them, go apply. And they're like, I can't, I don't have any employees. And I'm like, you're not listening to me. You're an independent contractor, so you can go and apply.
You're an employee of one. You have to think of yourself for the application purposes. When it says how many people in this business, you put the 8,333 if you make, because I would imagine a good amount of you make over 100,000 a year. You put that in, you've got the calculation times 2.5, and as that's the number of employees, you put 1. Even though you're not officially an employee, you're an employee unto yourself. As an independent contractor, you're your own employee. So basically, that's the number you have to live with for that 8 weeks. It's a very simple process to get 100% forgiven. Well, so yeah, I want to make sure every realtor out there, the 104 people that are listening to this, that you understand that is something that you can do. You put yourself as the employee 1, and the lender you're pretty much guaranteed you're 100% forgiven.
So long as you don't fire yourself, right? You can't.
Yeah, don't fire yourself. Yes.
Okay. So if a person is an agent and they also have maybe just one person on salary, they would want to sit and look at what would be the better option of the two, right? I think
because they can get PPP for their one employee, or they can get PPP for themselves as an independent contractor. They can't do both.
Yeah, that's a huge point, because $20,833 might be a lot more than they're paying their salaried one person or 2 people. That
person may be a $30,000 a year person. They may end up getting like $6,000 or some ridiculously low money in PPP, when if they just do it for themselves. And with that money, they can choose to do what they want to basically help that person that's still their employee, if they're still, because my understanding is you guys are still staying busy. It may be with some curtailments, and I was reading something today about how people are selling houses more virtually now than ever before, because the home visits aren't as prevailing at this point. So yeah, so it's interesting for your industry too.
You know, it is really interesting. We started when this first happened, Patty and I said, what are we going to do to get through this? Like, oh my gosh, it's different. We've never lived through this before. So we started a trending together with some of the top agents in the city, and we're doing it every Tuesday and Thursday. And a bunch of business is still happening, and we're getting, you know, people are learning from that and taking things away. And it's kind of like this PPP that came out. I'm like, pay attention to it because it's new and we don't get it. But there's, you know, if you can put an extra $20,800 in your pocket, you should, right? If we're going through it, because our business is slowing down.
And again,
Yeah.
to be clear on that, I had somebody, I'm monitoring the chat and I'm getting texts. If somebody is a sole proprietor and they have one person on payroll, legitimate payroll, they can only claim the 100,000, correct? They have to claim one, not both.
Whoever they have W-2 income from. Now, depending on the lender, some lenders are allowing, so you are a sole proprietor, but you have an employee.
Right.
Some people are allowing them to submit for two. Some
Okay.
lenders are. And what they're doing is they're taking a look at the W-2 income plus your income as the owner. So they're looking at Schedule C, they're looking at distributions, they're looking at that. So again, the lenders have a little bit of flexibility in how they can determine this. But yeah, it really depends on the lender. And I'm dealing with a situation right now where an individual has an employee. The lender is being very conservative and only basically not taking consideration the top line, the 200,000 or so that they make, or limiting it at 100. They're taking a look at, you know, they had a $30,000 bottom line, which is a very small add-on. So, you know, we're trying to work that out with a very conservative bank right now to take a look at it and say, you know, at the end of the day, I try to tell lenders I mean, as long as you can document properly how you came up with the calculation and it's not fraudulent, then what do you have to lose? It's 100% forgiven. It's 100% guaranteed. The banks are all held harmless. So, you know, so again, what we're trying to do is help each individual as best we can. But there are definitely circumstances that are strange that we have to take a look at almost one-on-one.
Thank you for that. So to be, I want to go back to the EIDL program and the PPP. Why would somebody use the EIDL loan?
Well, number one, for all intents and purposes, EIDL loan is based on gross income and less cost of goods sold and number of employees. So the advanced portion is really where the number of employees is important. With the EIDL advance, if you have 10 employees or more, you can get up to $10,000 advance. And it's an advance. It's not a loan. It's not a grant. Everybody asks, is it a grant? It's only a grant if your application is disapproved or denied. The EIDL loan basically in cases right now will allow you up to $500,000. It's up to a 30-year amortization, 3.75% fixed, and it can be used for anything operationally. I mean, I know people are getting, you know, $500,000 EIDL loan checks, and they're basically just propping up the whole business, everything but payroll, because they got PPP too, to make that work. So, so yeah, so it is worthwhile. I mean, they're two independent programs. I tell every small business to do both. I mean, you could end up with $25,000 from EIDL and $25,000 from PPP, and for some of you, $50,000 would make a big difference. You know, that's a couple of commission checks.
Certainly would.
Yeah, I think people are still confused, and so I'm going to ask you another way. If I'm an agent and I have just one person, I have to be smart enough to decide which way I want to file. I have choices. And I think that I just want to hear you say that again, because I can tell people aren't getting it. My phone's blowing up and I can see questions in there.
So say you have one employee that you're paying $35,000, $36,000 a year. Okay. So 36,000 divided by 12 is what? $3,000. You're going to get $8,000 in $7,500 in the PPP program if you do it as a business with one employee. Okay. If you are that same person making more than $100,000 a year as a independent contractor or as the owner, and paying yourself in distributions, you file as an independent contractor or as an owner, or a sole proprietor, whatever you are. Basically, you're going to get 8,333 times 2.5, which is going to be a greater amount of money. So if you're in that situation where you're the sole proprietor, but you have an employee, do you want to make $7,500 or you want to make $20,000 and change? I mean, that's really what it's about.
They will understand that. That's clear. That's exactly, they'll understand that part of it.
Yes.
Yeah. It's not taxable too. So
yeah, it's a non-taxable event if it's forgiven, when it's forgiven. If it's a loan, it's not a taxable event either. So, you know, that's the best way to look at it, you know, in that most simplest way. If you're a sole proprietor, you have one employee, you're not going to have nearly the bang for your buck. Now, if you have multiple employees, it adds up differently. But if you only have one employee, one assistant, one processor, I guess you could say, while you're doing what you're doing on the realty side, it most likely makes sense for you to apply as a sole proprietor as opposed to doing it as a business with one employee.
Thank you for speaking on that, because I can tell that it's not clear to people. The other question I have, and I've seen it done differently. Several of our guys have gotten these, and some have had, the bank has figured it based on their 1099. Some of them have only looked at their Schedule C with huge expenses in there, wouldn't take it back. And one, I figured it out based on them canceling 2 commissions, which seems crazy to me. So it tells me that the banks don't really know what they're doing, and they're scrambling through this.
Well, and I wouldn't say the banks don't know what they're doing. They're interpreting the rule, which was written in like 2 days, in a different way. Some are doing it very conservatively. Some are doing it more in line where I'm thinking, you know, they're reading the rule differently. And it's well within their right to do so. I mean, so I don't fault the banks that are more conservative. I don't basically, you know, praise the banks that are more aggressive. At the end of the day, we're all trying to put money in the hands of small business to help them survive through this. So what I would tell you is that in each case, you know, depending on who your bank is and how they look at it, how they calculate the numbers, it's going to be different in each bank. I'm trying to get Treasury to give a more definitive way, because most of the banks that are conservative would love to give more money. They've told me that flat out. They'd love to give more money. The issue is that they don't feel the way the rule is written, it's so nebulous that they're doing it more conservative way. That's all. So it's not that they're dysfunctional in any way. They're interpreting a very broadly based rule that was very hastily put together in a different way. And they're both right.
Yeah, and I think everyone had such little time from when they first read the law. I remember seeing it, and then 2 days later, they're starting to do it. So we're figuring it all out as we go. And I think it's just important that agents know that there's differences out there.
Yeah, there is going to be different interpretations. And right now, I don't think anybody cares to fix it if both ways are being improved. You know, they just let the conservative banks do it one way, let the other banks do it the other.
And a couple of questions on the application process. If somebody has applied and not heard anything, is there a central site that they can go to find out the status, or they have to go back to that lender? Is that lender their point of contact?
The lender is in control of the application from start to finish. So, yeah, I mean, I hear that all the time. I haven't heard back from my lender in weeks. That's not a good thing. I will tell you, most of the community banks are very, very responsive, very quick to get back to you. Some of the regional banks are a little bit longer because they have more applications they're dealing with. You have to the minute you get in contact with the lender, and a lot of it's just being done online, so you never really even talk to a person. So it really depends on who you're working with and whether or not you're going to have that interactivity that's going to be, you know, pleasing to you. I'm not going to say that any bank is doing it right or wrong. It's just they're all doing it differently.
Another question that came in: if you applied with a big bank and you want to change course and go with a smaller bank, your loan's already in process. Can you withdraw that and start over somewhere else?
What I've instructed some people to do is to talk to the other bank, know that they can satisfy whatever needs I have, and then get in contact with and sometimes it's just online. What'll end up happening if you can't get in touch with the bigger bank, the smaller bank will basically put it in, get your PPP number from the SBA, and the other bank will be locked out. And at that point, it's their loss.
Thank you. Great on that.
And that was my understanding, because I was nervous about, I kept on hearing about funds are going to run out when I had my application in, and when they told me, they said, no, we have your SBA number. And so once you get your number, that's when you know that your money's been tied up. Is that how that works?
Yeah, once you get the E-Tran number, which the bank will give you, that means the loan has been approved by the bank, submitted to the SBA, and the SBA has reserved funds for that loan. So yeah, that's how it works. I'm just looking, there are credit unions that are involved in this program as well. I'm seeing that. If you haven't heard anything on your EIDL loan, email me your EIDL loan and your EIDL loan number, the name of your business and your EIDL loan number. And I'll try to get a backdoor status report on your EIDL loan. It's not easy to do, but I'm able to get it done.
We so appreciate you. I mean, it's just,
yeah, that's huge. Thank you.
How does the bank completing? Okay, when you're completing the applicant's form, the 2483, you're normally doing it on the bank's website. The minute you fill out that form and submit it, the bank has your application, and you should be in process at that point. If you go on the SBA website and look at the form 2483 and just fill it out, it goes nowhere. SBA does not control the PPP program. The banks do. So, having or being familiar with the form or getting the form prepared to go to your lender, normally the lenders on their active websites have a form for you to fill out on their site. Okay.
I think we should just let you go through the questions if you want, or if you
yeah,
want.
that'd be great. It's not too late to apply for EIDL. EIDL will not go active again until new funding comes in. Supposedly another $60 billion is being put into EIDL. That'll be probably Thursday. Just keep on watching the website, sba.gov/disaster. Look for the economic injury loan program and just basically fill it out. It takes 10 minutes to do the application. Let's see, Connie, blah, blah, blah. Not sure. 1099 tax return, Schedule C or 941 filing. Yeah, those are the three main documents. 1099 if you're a subcontractor, Schedule C if you're a sole proprietor, 941 if you're a business. Those are the three main documents the banks are going to want. So if commissions are paid to agents LLC and the agents LLC,
technical ones in there.
Agent also makes, oh my gosh.
I know that's an offline one. That one's pretty complicated.
Yeah, you can, Robert, you can reach out to me directly, but what you're going to present to the bank is your, all the documentation to show what your compensation is. That's the best way to answer this question. So if you have 1099 income, if you have commissions, if you have W-2 income as an independent contractor and sole proprietor, depending on you file your taxes and how you count your income. I'm a consultant when I'm not running the SBA. So I get 1099 income. I get some W-2 income from certain companies that basically have me on payroll so that they can get my expertise 24/7. And then I have my own income I generate separately that I don't get in 1099. So on my Schedule C, it's representative of all three income streams. I would present that to the bank and say, I make $250,000 a year as a Schedule C. My bottom line is X, but my actual income is the 250. I know it's only limited to 100, so I want the 8333 times 2.5. That's how you basically represent that. Some banks will embrace that and take it. Other ones will give you some contest. I mean, basically what it comes down to is if I can help you with the bank, I will. If not, we can redirect you to another bank.
This is a great question that I had. I don't know if you saw it in the Q&A because we're looking at the chat, but you've got the EIDL loan program, PPP, and then unemployment benefits.
The UI has to be, the minute you get your PPP funding, you have to get rid of, you have to basically, you're now getting money from an outside source to take care of you compensation wise. You cannot be an unemployment and PPP. The EIDL loan program, again, if you're using it for payroll to pay yourself, it would exclude you from unemployment. If you're using it just to prop up your business operation until things, there are some limitations to your unemployment because you have to say that you got money from an outside source. Now, if it's a loan, you don't have to disclose that. But if you get compensation from an outside source, like through PPP, then you have to get off of unemployment insurance.
What about commissions? What if they sell a home in that time too, and they're collecting the unemployment? You got the PPP. Let's say somebody gets a $10,000 commission check. You still have to report that.
You have to report that to unemployment. They may adjust your unemployment insurance.
Right.
Like if you're laid off from your company, you apply for unemployment, but you close the deal in the meantime as an independent contractor, you have to disclose.
Got to report it.
But it's not going to affect your PPP. That's totally separate.
Yeah, it's separate. Now, somebody said you can't apply for PPP again until most likely Thursday. The banks aren't taking that. Some banks are taking information, but not applications. Some banks aren't taking anything until new funding is approved. So, and that will probably be Thursday.
Mhm.
I'm an S corporation, pay myself through payroll. I can apply for PPP, correct? Yes. Any W-2 income, if it's for yourself, your people, whatever, Bridget, you can pay yourself. You can basically apply for PPP. Okay.
And it's also, I just want to add to that, that it also, you need to look at your 1099
Take a
income
good
as
look.
well to decide which one's the more logical one.
Take a good look, right?
Yes. Sole proprietor, I do not have staff other than myself, so I'm an employee of one, yes. You do not pay yourself. You're a sole proprietor, you don't pay yourself. You're going to basically show the bank what your income is, and what your income is. And basically from there, they'll substantiate your 2.5 times your monthly average. So if say you made $100,000 over the year in commission checks, you're going to provide that proof to your banker. They'll take that number at 8,333 times 2.5 to come up with your PPP portion. Yes, and I said the idle new money will be 60 billion, not 60 million. If I said million, it's $60 billion. $60 million would be gone in about 3 minutes. 60 billion may take a week.
Is that your estimate, sort of? Is that we might be seeing it for last for a week?
Well, the PPP, the 349 billion for PPP lasted 14 days. And in 14 days, they did more SBA loans under PPP than they did in the last 14 years.
Wow.
Combined.
Wow.
So that's how much it's needed, and that's how much it was utilized. So, 349 billion was done in 14 days. We're thinking that the 240 billion is probably going to be done in a week to 10 days. So you have to get your application in there.
And I think a lot of people didn't know about it in the beginning, and they're just coming into it now. Like a lot of the big ones did, of course.
Well, you know what? My conversations with Treasury a little bit differently. I think what's going to happen is most of the people that needed it desperately learned about it quickly and already applied and already got their money or getting their money. A lot of businesses that are learning about it now are going to be these types of businesses that are a lot smaller dollar amounts. So I think it's going to last a little bit longer. On the lending side, there were over 5,000 lenders that got involved in this program. The way the program works, a lot of these smaller lenders are already at capacity. They can't lend anymore. They already basically did 100 million, 200 million, whatever the number was. So there's going to be a lot less lenders available to do this unless they start selling their loans at a discount to the Fed window, which is a whole different explanation. So basically we're not really sure, and the experts, as much as they try to be experts, don't really know really where the base is going to go from a lending side and from the applicant side, because of being hit so fast and so hard, with the original 349 billion. So it's going to be interesting to see what happens. Did I reply? Wait, I have an occasionally no longer my, should I reapply? I thought you said there is something we can do to reapply. You can, the EIDL program, you can reapply if you haven't heard anything in a couple of weeks. If you send me your number, normally if the number starts with 3, I can get an update on whether or not where it is. With the EIDL program is, if you haven't heard anything, but if your loan's in the queue, you should be eventually get funded. On the PPP program, I have an application number that is longer than my leg. Oh, okay. I get it now. If you have an application number ready for the PPP, that means you should be in the queue, and you're either going to be funded over the old funds, or you're in the queue with the bank and they're getting ready to submit it to the SBA. You just need to clarify what the application number substantiates. In most cases, banks are only getting application numbers if your loan's approved. That means your funding's already reserved and you should get funded within 10 days of that approval or receiving that number. The website is showing that you could apply with some online lenders if you couldn't find a local bank. Is that true? Yes. A lot of lenders are not taking applications right now, Brett, until the new funding's approved by Congress. So that would be Thursday. But some lenders are accepting information right now and putting you in a queue to basically, get you taken care of longer, taking care of you faster. Let's put it that way.
Isn't there, Joseph, isn't there some online banks too that they can go and apply for?
Yes, there is. There's 2 online banks. One is Kabbage, Kabbage. The other is On Deck, and they're developing PPP loans with Celtic Bank. Those are 2. There's another one, Lendio, which is an aggregator. They're basically like a mortgage aggregator. They basically will get they have loans that they're corresponding, or banks they're corresponding with. So they'll take your application, they'll get it with one of the correspondent lenders. So between Kabbage, On Deck, and Lendio, those are 3 options that are legitimate that you can go after, but none of them are taking applications until the new funding is approved.
And I think that would be right now they should be gathering all the documents so that they're ready to go.
And if you need to run it by me to say, hey, this is the approach I want to take, does this make sense? I will try to get back to you within a day on if you do reach out to me to have me take a look at what you're thinking about applying for.
So they need to get their documents in order, right? If they're in the PPP, right? The 1099, the 941, or their tax return with the Schedule C.
Right.
Can they start looking at the 2483 with their lenders so they can pull the trigger as soon as it's...
The 2483, yeah, they can look at it online at sba.gov, /disaster. They can find the documents, they can look at it. It's simple as heck. They have about 9 questions, and you're putting in your monthly average, payroll. You're basically giving them the number times 2.5, and then you're giving them the number of employees, and it's that simple. I mean, the application itself probably takes to fill out less than 5 minutes.
Right.
Yeah.
So get ahead of it now for everybody on this webinar. Get ahead of it now. So if Thursday it is approved, you're ready to go. Don't wait until Thursday. Those are your key things. Get your documentation for your income in order and take a preview of the 2483. So anything that you believe you cannot answer, although it may be easy, be prepared so you can pull the trigger Thursday.
Well, and this is recorded as well. So
there's a question here. If commission is paid to LLC under my EIN and I don't pay myself, do I have to disclose the unemployment insurance? I'm not going to answer an unemployment question. I mean, I think you do have to disclose it, but I'm not going to answer the question. Any compensation you receive, even if it's indirectly, should be disclosed unemployment. But I'm not an unemployment expert. But I would think that you don't want to not disclose any kind of compensation you receive, whether it's direct or indirect. That could get you in some trouble. I don't see any more chat questions. Let's leave it. I've got about probably 10 minutes. You want to open it up to other questions or?
Yeah, I think if anybody has something, type them in the Q&A and let's see what else comes up. I'm
going to look in the Q&A box now. I've been looking at chat.
Yeah, there's a few in there you can dig through. I also want to say that this is being recorded, and so, there's a lot of information, and you really have done a great job of covering it for the real estate agent. So
fantastic.
I saw people ask the same question over and over again on every one of these that I've been on, and we did too, but I would say it wouldn't hurt to watch us again, just to make sure you've got everything in there. And if you have a question, I bet you it gets answered as you.
This is an interesting one. So, okay, say you apply and you use 2019 as your basis, and you come up with $8,333 your monthly average because you make more than $100,000, and it's what you apply for, and that's fine. If during the time that you're going through the process you get a huge commission check or something, it doesn't matter. I mean, you can keep on making money. There are businesses, understand it, in the business side, there are businesses that apply for PPP, they're still open, active, and still making revenue. There are businesses that apply for PPP, they're partially open, only doing like takeout if they're restaurants. There's businesses that apply, they're completely shuttered, and they're paying their employees for the next 3, 4, or 5 weeks until ever, this stay-at-home thing is mandated by the governor is ended, and they're paying their people to stay at home to be on standby, per se. So, yeah, I mean, if you're making money in the interim, that's fine. Make as much money as you want. You've applied for PPP based on your historic income average times 2.5, and that check that you get, which is probably going to be about $20,000 and change, is going to be, that's free money to you to help you over the next 8 weeks if you're not getting a commission check. So, sort of keep that in mind. Is a medical benefit plan considered in the 100%? Yes. If you're paying any kind of group health insurance or medical, remember, Your payroll and salary is limited at $8,333 a month if you make over 100,000. But say you make $5,000 a month and you pay $2,500 a month in health insurance, your number will be 7,500 times the 2.5, not the 5,000 times the 2.5. So if you and an employee have a combination of $10,000 a month that you get paid, plus you pay $2,500 a month in health insurance benefits, that number will be $12,500 a month times 2.5, not 10,000 times 2.5. So yes, so it is in addition to whatever your salary averages are. What if you have 2 S corps with me as the owner of each? Can I apply for both corps? Listen to me, everyone out there in the in the web over here. Common ownership, 1 business entity only. If you own 10 companies, if you have common ownership, the minute you apply for one for PPP, you cannot apply for any other unless you are a hotel chain or you own a group of hotels or a group of restaurants. That's the only time you're allowed multiple applications. So 1 common owner, 1 social security number, 1 tax ID number, and you're only allowed 1 PPP application, plain and simple. Is the idle loan something the 1099 employees should even do if they already applied? I mean, 1099 employees can apply for both idle and PPP. I mean, you may end up with $20,000 or so in each, depending on what your expenses are and such. You may end up with a big idle loan and a very small PPP loan. That's fine. I mean, you're allowed to apply for both. That's not a problem.
But the idle has to be paid back.
The idle loan has to be paid back, yes. Alex, you just sent a Q&A. Email me at joseph.amato@sba.gov. Here, I'll type it in.
And we had another question that says, so if I'm still getting commissions, can I file for PPP? And the answer to that is
yes, because you're going to file for PPP based on your historic income from 2019. Anything you make in 2020 is over and above. Again, you could be an ongoing operation and still apply for PPP for your employees. It's to cover you for that 8 weeks so you don't apply for unemployment. You have to be off unemployment. I saw one. The idle grant has to be paid back though, right? Stop calling it an idle grant. It's an idle advance. There is no grant unless your idle application is denied. There is no idle grant. Any documentation, I see stuff from CPAs and lawyers and business groups calling it the idle grant. It is not a grant. The advance that you get in the idle program is $1,000 based on the number of employees that you have in your business, up to 10 employees. That $10,000 or up to $10,000 is not a grant, it's an advance on the loan that you get. So if you get approved for $250,000 in your idle, you'll get a funding of $240,000 because you already reached 10. This is a good question. I filed an extension for 2019. So did 99% of the world, the United States. You don't have to file you don't actually even have to file an extension because everybody's got till July 15th. But your tax returns have nothing to do with PPP. Your 941s help to solidify your PPP numbers if you're a business, but or if you're an individual, independent contractor, sole proprietor, you don't have to have your tax returns filed. Okay? And if you're doing it, again, that's because we talk about Schedule C. So what if your Schedule C isn't done because you haven't filed your 2019 tax returns? That's a good question because what are you going to use then? Most banks are just using your your QuickBooks P&L as basis for the money that you made last year. Okay, you filled out the 2483 in the SBA's website 2 weeks ago. Haven't heard anything. Who do you expect to hear anything from? You fill it out on the website, doesn't go anywhere. You fill it out 2483 on your SBA website and you submit it to your lender, then your lender will basically process your PPP loan. Filling out anything on the SBA website except for the idle loan will not get you anywhere. All the form is on the SBA website is basically to inform you what the application looks like. You have to file the application with your lender in order to be eligible for PPP. We were applied, approved for, and signed the note yesterday. The approving was for one employee. Now that I'm hearing It should be me because I'm scheduled to stay. Joan, I'm not really sure. The question, was it for you and an employee, or was it for?
I understand the question, and I think this is a question that's going to come up a lot, Joe. Some people have already filed for their one single employee, and now they're hearing today, oh shoot, I should have chosen me because I would hit that $100,000 income.
Right.
What can she do now?
If she was approved as the business for the employee, and now she's realizing that she could have got more money. I think when you add it up, you may want to talk to your lender and say that now that you understand more about the program, that you'd rather reject the application, which they can do. They basically reject the application, put the money back in the pool, and then they should reapply as a 1099 as a independent contractor. But or a Schedule C, make sure that the banker will approve if they do that before they do it. But I would explain to the lender exactly, listen, I didn't realize I could apply as a 1099 and get more money than I could as an employer of one with a lot less compensation or a lot less wages. So yeah, that's what I would do.
Thank you for that, because I think there's going to be a lot of people in that boat.
No, the EIDL loan does not need a lender. The EIDL loan is directly with the SBA. You get approved by the SBA, and then you get money directly that's dispersed through the Treasury from SBA. So no, EIDL loan is a direct SBA loan, sba.gov/disaster, economic injury disaster loan program. You fill it out online, takes 10 minutes. It's directly with the SBA. The PPP program is directly with your lender. Completely different. Okay, I think that's it for me. I've run 2 minutes over.
You've been great. You've been great. Amazing.
More questions, Debbie, Patricia, don't hesitate. You have my email address. You can send them to me directly, and I'll try to get to them within a day. Okay?
Thank you so
much.
Thank
you so much.
And if we need to do this again, say in a week or two, hopefully not, we can always do this again if there's a need. Okay? All right?
Great.
Greatly appreciate your wisdom.
Thank you. Thank you so much.
Thank you so much. I really appreciate this opportunity. Listen, everybody, I think that good times are going to come back. It may take a little bit of a while, but we are working right now with the governor's office, the mayor's office, for both Las Vegas, Henderson, everyone. We're really trying to figure out what we're going to do for next steps for recovery. So that's where our focus is going to be. Getting through this, getting basically interactivity reinstated. Be smart about it. Be safe about it. But we're really going to focus on recovery. Okay.
Thank you for that. And we are going to be live streaming this off of the Keller Williams Realty Las Vegas Facebook page. So if you want to listen to it again, it's been recorded. It'll be showing up there, and you can get more details because I know there's a lot of information. So thank you, Joe.
Thanks. And I'm looking forward to meeting you all soon. Take care.
Thank you.
Bye.
Thanks.